Okay. 9:03, a minute after my goal time. But I think we have a quorum and folks logged on, so we'll go ahead and get started. We'll start with some introductions and then some context for the discussion that we're having today. I'm Bev Carleton. I've been in some form of talent acquisition my entire career, which is about 2.5 decades now, starting in recruiting, individual contributor, executive search, moving into program management, and then some hybrid between, talent acquisition and HR roles for my entire career. The last decade or so has been in global talent acquisition roles, largely in the consumer brand space. I was the global head of talent acquisition for Fitbit, just right after IPO, where we onboarded 2 new continents and almost tripled the size of the company. So lots of swings. Was sort of my first jump into what this all looks like. Also experienced what we call hypergrowth and rapid downsizing during my tenure there. I led the global headcount planning for Roku as they approached IPO for about 6 months. And then my last corporate role was global head of talent acquisition for Pinterest, where we also doubled the size of the company and opened 3 continents there. So also rapid growth and rapid downsizing twice during a 2-year period I was there. So this is a subject that's near and dear to my heart. Also lots of previous wounds that I'm still licking. When I left my corporate career, I moved into venture capital, working primarily with founders to think about what is the type of talent that we need and how do we build contingency plans if we get funding or not. I was introduced to the Team Ohana panel a little bit more than 1.5 years ago. They asked me to come on as an advisor, which I accepted, which I don't typically do. It's a time constraint and I'm just focused on other things, but this was different for me, in that I felt the conversations that had been lost in my career that could have made me a more effective partner to the business were just starting to happen for the first time. And tools and tech was starting to evolve to make these functions more productive. So that's how I've ended up here today. This is, while painful, one of my favorite topics because I think it just doesn't get enough airtime. So I'll be relying heavily on Scott and Amanda to fill in here as we evolve through the conversation. And then we'll leave some time at the end of the session for you to ask the questions that you have. If we can tackle them here on the screen, great. If not, we'll schedule some follow-up time with you as well. So that's enough about me. And Amanda, I'll have you introduce yourself next.
Awesome. Hi, everyone. My name is Amanda Gregg, pronoun she, her. I have not quite as much experience as Bev, but pretty significant tenure within the high growth startup space. So I actually landed in the tech space in 2008 after the last pretty significant economic downturn and had no idea what I was getting into. And it really shifted my career in a really exciting trajectory. So I've been very early on and seen very, very rapid growth at companies like Palantir Technologies and Asana in the Bay Area, very early in their growth journeys. And then more recently, I have been with some smaller fintech company. I was at a company called Airwallex prior to my most recent role that I've wrapped up at Postscript. So I've seen fintech, I've seen big data, I was at Airbnb, seen hospitality, and then most recently coming from e-commerce marketing technology. So I would say, much like Bev has seen throughout her career, a lot of experience with like rapid high growth, doubling teams, and then very quick turnarounds of, on the path to going public, needing to get spending under control, needing to get headcount under control. And so it's been a really interesting journey. My last role at Postscript was within the marketing e-commerce space. So I started and it was like, hire at all costs. There was no really set headcount goals. We had numbers that we were working towards, but everything was a moving target. We were changing levels all the time. And then starting in 2022, things shifted really rapidly and the headcount got locked down. And so a big part of why I wanted to join this panel, even though I haven't been an Ohana user yet, is in all of my experiences, I've never seen headcount planning done really well. I've never seen it done in January, despite always wanting to end January with a solid headcount plan. And so, and just learning a little bit more about the product. I just feel like this is an area of improvement for TA in general, and it's long overdue. So I'm really excited that there are resources and just more dialogue going into this.
Great. Thank you, Amanda. Okay, Scott, over to you.
Thanks, Bev. Hi, everyone. Scott Baumgartner. I'm currently the CFO for Docker. I've spent about the last 30 years in software and SaaS businesses, rode through some tough economic times, through the bust, through 2008, and now our current challenges. So been on the upside and downside of a lot of growth and retraction, as the other panelists have mentioned. At Docker, been here about 3 years. We've been in a hyper growth mode, but obviously given the background of initially the pandemic, and then more recently the economic strains, proceeding with caution. But that said, we've been doubling headcount each year since I've been here. So prior to that, I was at another startup called SmartSip Analytics. We did predictive marketing for the real estate and lending space. That was a story of kind of up and down in terms of, building up a team and then having to staff down as due to changes in the business. So, some good learnings there. The reason I'm excited, we were early adopters of Team Ohana. Obviously, as a CFO, especially of a software company, I oversee, capital allocation of the business. And so in a software company, 70% of that capital typically goes to resources. And so headcount planning and resource plans are so critical to our operating model that having a strong tool and platform is essential. So I became an early adopter of Team Ohana. My financial planning team got to have a lot of inputs and provide feedback. And we're excited users of the platform. So super excited to be here.
Great. Thank you, Scott. Contextually, I wanted to also offer as we go into the conversation that it was unfortunately very late in my career when I understood the tremendous value of triangulating finance, the head of HR, and the head of talent acquisition, assuming those functions are separated. And by the time I figured it out, there was a lot of lost time underneath my wheels. And those of you who are in the talent space may have been going through this as well, where you get the plan rather than informing the plan and being a part of the conversation really early. And that's really what we want to hone in on today. So I'm particularly happy to see that we do have this type of triangulation in the conversations, because teaching heads of talent and heads of people and finance how to speak each other's language to become true partners to the business would be my ultimate goal for everyone here. So we wanted to be able to offer varying perspectives in the state of the world that we are in today. Okay, with that, I want to talk about the state of hiring with the both of you very quickly, just so the folks who have dialed in have some context. Scott, you touched on the fact that you're actually in a situation where you are hiring, a bit unusual for the tech industry where we've been focused. So I'd love to hear about where you've been at the onset when you came to Docker, where you are in the 6-12 months, and then now we're in Q1 of a new fiscal year, what you're projecting this year. So just some tidbits about how you're approaching that work.
Yeah, certainly. So when I joined Docker, March of 2020, almost 3 years ago, is right before the whole economy shut down and we were all locked up at home initially for the pandemic. And so I joined, and one of the first exercises we did, because we didn't know how the business was going to be impacted, was what's going to be our austerity plan, right? And a big part of that is how will that impact the limited number of resources that the business had. A few months go on, we were fortunate not to be impacted by the pandemic. Actually, as you can imagine, with everybody trying to get their businesses online, digital, our business grew through the pandemic. And so, we doubled our headcount that year. Fast forward, to more recent experience here, we were still on a trek over the course of last year of growing headcount rapidly. As the economy worsened, we kind of put caution lights on and said, hey, let's let's be very thoughtful and cautious in our investments until we get better visibility into our customers. And, are they going to continue to subscribe to our platform? And so we prioritized at that time, we prioritized, revenue generating heads, customer facing heads, and, waited till we got more visibility to green light additional resources. So obviously talking about, the partnership and collaboration with talent, hiring managers, and finance to make sure that you can put those controls in place to do that is critical.
Yeah. I want to come back to how you prioritize that later, because I think in terms of a takeaway, that's a great conversation starter for the folks in talent people to have with their finance manager. And Amanda, I was following Postscript after you joined, and I saw that you were likely an unfortunate part of growth and then flattening and having to lay off. So I'd love a little context on your last year at Postscript.
Yeah. So when I joined in 2021, they had just, as many companies during the pandemic, were able to secure some funding. With that funding came large revenue targets as well as significant headcount targets. And so I started with a team of 7 and recruiting a wonderful recruiting operations person and some great recruiters. And we were on a sprint. The company grew from 47 people at the start of 2021 to just under 220 at the end of the year. And I've seen like rapid growth. I had never seen that kind of velocity. And we were able to do it. I truly, the recruiters that I had the opportunity to manage there are some incredible recruiters. And so there was not a lot of time for taking a step back and being thoughtful about things like leveling. It was a lot of the conversations of, we were just as the HR team was still building the leveling framework at that time. So it was truly like the wild, wild west in terms of, well, we're targeting a mid-level person, but their salaries are a little bit higher and the market was so competitive. So it was a lot of decisions made on the fly. We actually didn't have a finance team in place until the end of 2021, which was another interesting challenge that we were dealing with. Hiring for our now CFO was one of the things that I had taken on when I joined. So it was fun and chaotic if you enjoy that kind of fun, which I do. It's why I keep going back to early stage startup companies. But it can give, especially like earlier in career recruiters, it can be really exhausting and give you a lot of whiplash because you have a moving target. And in this instance, we didn't have finance to kind of lean on to make sure that we didn't really know what kind of budget we were working with, because it was the time of free money, right? It was the time that the competition for talent was so fierce. Everybody was trying to one up everybody on, signing bonuses were all over the place, more equity, more cash, and not just within engineering, which was what I had seen for the majority of my career, but in all roles, because so many companies coming out of COVID had cut really deep, especially with recruiters. I have to say, recruiter salaries in particular took some really big spikes, because as happening now, a lot of companies are really pulling back on their TA staff. And so they realize they cut too deep, they have to hire again. And so it just created a really chaotic environment where there was very little stability in a lot of places. And so 2021 was that like rapid growth. And then when we started planning for 2022, fortunately, at that point, we had a wonderful finance team in place. And so we could see the brakes start to get pressed, and we could see the initial kind of growth that we thought 2022 was going to have was not going to look that way. And then pretty quickly, I saw the writing on the wall that we were going to be doing a reduction in force and just making a lot of tough decisions around how what product prioritizations were being made, therefore headcount, changing the sales motions. So it was a really challenging time. The company ripped about 18% in June. I was not part of it at that time, but I had to cut half my team. I feel grateful that we did it early because everybody was able to land, because it was really before some of the larger tech companies started doing their layoffs at the end of 2022, early 2023. And then actually my role has been eliminated as well. So I have a new role lined up starting next week, more to come on that. But as we looked at how slow growth was going to be over the next 12 to 18 months, it just wasn't the right move to keep someone like me in the role versus having just more on the ground IC recruiters, because there wasn't a lot of strategic work that was going to be happening. So it was, within 18 months, a complete 180 from when I joined.
I can imagine that a lot of the folks who are on the call are going through that exact scenario right now. And there's one gap here that you called out that, Scott, I think would be helpful to hear from you on, is in lieu of even having anyone in finance, because maybe some of your finance team has walked or been cut as well. If you're in the head of people or the head of talent role and you're going through this in lieu of a CFO, like Scott, what would you have advised the folks in that role? What exercises or questions would you have to have them start thinking about prioritizing for the business, knowing how far down are they going to shrink and how to think about that? What questions would you have?
Yeah, I think even without a CFO, hopefully there was some finance resources, FP&A, nothing. Okay, so that's interesting. So I don't know who it was that was providing guidance of, how much capital you have, how do you prioritize your investments, what type of runway you're trying to plan for, right? And it's such an important part of the partnership you have with talent and HR, right? Because it all affects your business outcomes. So really curious on how that worked, if it was just all top down, mandates of you have to do this without really seeing how it plays out into the financial forecasting process, et cetera. So
yeah, we could talk offline about that. I'm happy to unpack it with you.
Yeah, specifically, that's probably a good idea. I think in general terms, I know we do have some folks who have dialed in and people that I keep in contact with on a regular basis that are in a fairly similar situation, that don't have guidance. They might have someone who's doing the balancing, but they don't have the guidance of how to talk to the business. So let's say Amanda hears from engineering that they've been through this cut and now they want to hire 10 more people, and all of the different orgs are in competition for each other with this headcount. In lieu of having a really strong finance business partner, how does Amanda or someone in that role work and communicate with the business, acting with some fiduciary responsibility in the lens of a really strong finance partner? How do they start to have those conversations about the yes and the no and the when? Any tips on that, Scott?
Yeah, I keep looking at it through my lens, right? And so I think that obviously the talent folks are gatekeepers, right? And those headcount investments you make are super important. And so the understanding what the expected business outcomes are for each of those hires is critical, and the hiring managers need to be able to articulate that so that you can determine, okay, this is crucial for our business. This impacts our growth. It becomes clear whether they understand why they need to hire people, right? And as a business, we're getting a lot more disciplined around that. Even though we're in a hyper growth mode, those resources are gold, and so making sure that you have the right justifications, you have the right outcomes outlined. You're raising the bar with talent, right? New talent is going to improve the team. You have clear expectations around what those talent, between the hiring manager and the candidate, what is the 30, 60, 90 year deliverables going to be for that role. We started adding that to our job recs as well, just as a discipline. So just having that rigor around, I'm sure Amanda, you know it all too well, but at its highest level, knowing that when you're working with a hiring manager, that this is a priority for the business and it's properly justified.
There was an interesting conversation that came up this week that seemed like there were some nice parallels here. So we have two things happening. We have companies who have laid off and are now trying to plan in an after world and what that looks like, and companies who are planning layoffs and bringing the talent function in to talk about that. Someone had posted a question prior to the session beginning about, what things should be considered prior to going through a layoff. So as you're rebalancing your spend against your highest capital allocation, which is people, if we know that we need to shrink, how do we take into account the financial impact as well as other impacts to the business? And I'd love to hear, because you come from such different backgrounds, but ultimately trying to get to the same goal. How do both of you approach that? Or what are your thoughts on balancing the squeeze and the prioritization exercises?
I can jump in a little bit here. I think one of the things that companies tend to underestimate is after a layoff, even one that has been handled well, and as we've seen right now, there are some, companies are getting praised for doing it in a very humane way. Companies are getting ripped apart for doing it not in a very humane way. I think what you have to take into account sort of like what the drop in productivity is going to be immediately after a layoff, because everybody is going to be going through some sort of emotional trauma, whether they are exiting or whether they are remaining and dealing with sort of the loss and grief of losing colleagues, and the reality that the amount of work probably isn't going away, because it's while I think in some cases certain business lines or products may get cut as a result of financially planning differently, a lot of deliverables haven't actually changed. And so managers and HR and TA really need to understand what are the implications for those who are remaining and what they're going to have to manage. And then I think you also have to balance in some attrition. So people who weren't, and maybe in this market, it's not going to be as heavy attrition as it was, when we did our layoffs at Postscript in June of 2022. But some people are just going to say, I was already not happy, or whatever the case may be, and they're not gonna stick it out. So you have to understand that in addition to those who you have laid off, other people are gonna exit as well. And even in this market, really good talent will find new homes.
That's an outstanding point, Amanda. Really, really great to look at that. And a lot of companies don't consider that. What's the impact on the folks that still sit around the table and have to get the work done? So I'm glad to hear you talk about that. The other thing is the impact to the company image, the brand, right? I think that's something that has to be considered. Oftentimes it's unavoidable to make these changes just to preserve the business health. But those are all things that you need to think about. And when you go back and turn back on the recruiting engine, having that as part of your history may give candidates, pause. So those are all things that can happen. A lot of times it's unavoidable. You have to do what's best for the business, but you got to go through it eyes wide open. So
I will share with you in the 4 layoffs that I've been a part of, or right sizing organizations, it was shocking to me how the conversation never evolved into operational efficiencies. As you think about, we're going to have to refab almost all of these teams, especially with the really deep cuts that have been happening right now. How can we work with our leaders to overemphasize this notion that, have we talked to our teams to really understand, do they have the right productivity tools? Are there things that we're doing that's making them less productive? Are there teams that we can combine in a scrum type of atmosphere to tackle a particular problem that we have? So rather than adding or reducing headcount, are we approaching this in an efficiency way to make sure that, we're going to avoid attrition because we're burning people out. But if people are going to leave anyway, because now their team's been cut, they're having to do the work of the people who were in the seat next to them now. And why aren't we bringing in tools and true OE practitioners to come in and work with the teams to really think about where are we the most productive and how can we be spending our time? And that investment during these times, in hindsight, would have been exactly where I would have gone. If I was going to cut a team in half, I would have gone out and found the best OE person, operational efficiency or operational excellence person that I could find to come in and work with teams and pay him as a contractor and really start to dial in how can we become more efficient in every aspect. The last thing I'll offer on that is, especially in the HR team and the talent acquisition teams, we tended to increase our headcount in talent operations while we were decreasing the recruiting and the HR function. And all of them were working on different aspects of forecasting and planning and cost reduction and performance management and tools evaluations. So we were growing this huge team, but none of them could give you a single answer about how that was actually working. So intuitively, I think people knew we have to become more efficient, but most people didn't know how to do it. And I'm not sure that that's a conversation that even happens. Not sure if either of you have experienced that or what your words of wisdom would be to people who are struggling through that now would be.
I think that's solid guidance, Bev. I think what I would relate it to, and if anybody's familiar with the history of Docker, we actually sold off an enterprise business. This is before I joined. We cast off in that sale, 400 plus employees, and reemerged as a new Series A startup company. So a lot of the legacy from the old business was still there. And you had, a much smaller workforce. So that prioritization of how we're going to conduct business now was super important. And going back to your operating efficiencies is, what are going to be the priorities for the business? What can we stop doing, right, with the limited resources we have? So that was an important thing during that initial transition that helped us get through that stage.
Yeah, thank you. I want to step on that a little bit in a second. There were two things that happened here. One was that about getting really focused on OE and tooling during these times to make sure you're giving and receiving to the best of your possible capability. The other one is the talent brand aspect. And I talked to someone I used to work with who's an executive recruiter at one of the FANG companies that just did a massive layoff. And they did calculate for attrition. They actually over-calculated because, as it turned out, they weren't the only ones doing layoffs. Everyone else had done layoffs as well. So it turned out that people were wanting to stick with the company longer than they anticipated that they did. So now they're having to go through another wave that will be quite public because they over-forecasted attrition. But this executive recruiter was sharing with me that, the FANGs and the larger SaaS enterprise companies used to be a safe place. And so maybe you would, start off there, go take a risk at the table, play a little roulette, hope you make it rich. And when that doesn't work out or things go south or you're tired of washing coffee cups, you go back into an enterprise environment. And it turns out that that's not safe anymore either. So folks are really taking their time. But the brand impact of this particular FANG company is that the reputation that it's really cutthroat and was really hard was already there, despite all of the lavish perks that they had in paying 110 to 125% of market on compensation. But the mistrust that even executives have with those companies now, and remember, these are people who bring their teams with you when they come over. So you get one executive, you get 25 employees. Like that's the raw calculation in executive search for larger companies. And now where it used to be, they would have a 75% callback rate from leaders. They're having less than a 5% callback rate from leaders. So the trust has been broken. And the companies who are doing the layoffs who still have open positions haven't been able to tell candidates, this is why we think it's safe to come here now. And candidates are asking very pointed questions about how are you prioritizing your hiring? Why do we think this role has longevity at your company? How many people am I going to have on my team? What is my guarantee for the budget in my organization? What's the size of this team going to look like? And the answers are, I don't know. So if you think about having that data, when you're cutting people, the responsibility back to the roles that you sit in about pushing back on the business to make sure that we have these answers, not just for the health and answering to the street about how we're spending our money, but so that we can also make sure that we have a story to tell candidates. It seems like there's just a huge disjointedness and a lack of data and information to answer those questions. And Scott, having been a CFO a good portion of your career, I don't know if you have any thoughts or guidance on that for the people who are on the line in the HR functions.
Yeah, I think you raised a really good point there in terms of, being on the other side of now recruiting after going through that, and how, I like your thought process there of making sure that you can work with the hiring managers and teams so that the talent acquisition team can clearly articulate, as they're recruiting, what's the new goals and roadmap for these functions, and how will their role participate in that. So I don't know if you can double click on that, and maybe I'm misunderstanding the question, but.
No, I'm not sure there is a great answer. And maybe, Amanda, because you've been through these so many times as well, maybe even a different way to think about it is, what do you wish that you would have known or done differently, or the questions that you would have asked when you were in these scenarios of either massive growth or right sizing or downsizing an organization when you look back?
I can jump in on this one a little bit. I think one of the things that I have seen shift so dramatically since I started in tech in 2008 to where we are today is, like you said, the FANGs, there were safe places. And I think that a lot of the smaller tech companies felt that they had to, for talent, had to compete with the FANGs and some of the larger tech companies. And they were the ones that all went through layoffs first because they didn't have the runway to pay those salaries. And I think somewhere along the way, earlier stage startups became less risky, or appeared to be less risky, even though they actually hadn't in any way. Most smaller tech companies aren't going to make it. And so I think candidates, and I don't know if there was a way that this could have gone down differently. It is what it is. But candidates really started to decouple the risk of going to an earlier stage startup. And it made it unsustainable, which is, again, why we've seen a lot of these layoffs. And so I think in some ways, this reset is a little bit positive. And I think candidates are going to start to be a lot more thoughtful about where they're going, who they're working with, the missions of the companies that they're joining. Because in my earlier tech career, it was the compensation wasn't going to compete with the Googles and the Facebooks. So you were joining because the people, the mission, the potential upside with equity. And I think a lot of that has just been lost. And then the other thing that's really interesting is you have people, Gen Z entering the workforce, millennials now getting older, who have now been through a couple of iterations. And I think what the employee bases want has also shifted. And there's just been no way, there hasn't been a lot of dialogue around any of this. And I think that a lot of what we're seeing in the market now is a direct result of everything moving at a pace that was unsustainable because everybody was trying to keep up with the FANGs. And ultimately, they couldn't even keep up with themselves. And that's kind of where we are today.
Yeah. Scott, I have a question for you that I didn't prepare you for, but it just occurred to me. Those of us who pull compensation data to help our managers plan for roles, that data, with the exception of a couple of kind of cool new tools that I'm not sure have been completely tested yet, but are hitting the market, that data lags anywhere from 6 to 12 months. Some of them are on a quarterly basis, and I'm not sure the geos are up to date either. There's this conversation. One, let me make a statement. The other one is a question. There's a conversation I'm hearing that compensation used to be all supply side. So it's not inflation driven. Companies used to give cost of living COLA increases for employees along the way based on economic conditions, but the shift has gone to supply side dynamics. So when the supply is less, you pay more. When the supply is larger, you pay less. And I'm seeing a lot of focus on this in the communities where I'm dialing in and listening to planners. What is your experience? Because you're in growth when a lot of us are scaling back. What are you seeing with regard to compensation and also how that ties into your planning cycles? Because that's pretty robust data sets you're having to work with on the fly, right? There's a lot of calculation there.
Yeah, big challenge for us, and it's something we struggle with. As you mentioned, that data is hard to keep fresh, and we don't take a supply side approach, right? We're competing with the best companies in the world for top engineering talent, for example. That's where the majority of our resources are. So making sure that we can provide that competitive package, in the startup environment, as Amanda touched on, it's not only compensation, but equity is such a key component of that. And so, we just started leveraging some new tools around total compensation and, being able to articulate, hey, if you factor in the benefits, the potential benefits from your equity, this is essentially your total compensation, including salary, benefits, and equity. So it's tough to compete on that level. It gets a little easier to compete on that level now in this environment when the Googles and the Facebooks and other companies that are letting go of talent, and we're still in a position to hire. But keeping ahead of that curve, internally you hear it as well. It's like, hey, that my salary isn't reflective of the current market out there. People may go test the waters or whatever it may be. So there's no great answer. We leverage the known comp tool analysis and use experts to help us try and keep up to date on comp trends, but it's not an easy task.
Amanda, are you seeing, or have you seen since sort of late fall when we saw this last wave of layoffs, are you seeing compensation expectations shift?
I had not yet. I think a lot of people who are frankly overpaid and have decent severances will probably have to wait it out a little bit. I know when I was at Postscript, we were having conversations with engineers let go from some of the larger companies that, were asking for salaries way outside our bands. And we said, thank you very much. Good luck to you. And I think what they will start to find is, oh, I can't make, the amount that I was making. And perhaps that's part of why some of those smaller companies had to go through layoffs, is because they were overpaying and the burn rate was too high. So I think that the market will follow, even for, roles like engineering. I think that there was just some unsustainable salaries that were out there, especially in FANG companies. But it lags. And I think it is in certain, I'll be curious in like the Bay Area in particular, in Seattle, and some of the markets where companies had required people to come back into the office, and so they hadn't moved, where unfortunately cost of living just continues to be really high. And I think when you're doing headcount planning, taking into account things like, are you requiring people to be back in the office, or is it hybrid, or is it fully remote? Because all of those may sway what people are willing to consider when they're thinking about salary. And I know a lot of companies were doing tiered salaries. I also know a lot of that went away because of fully remote environments. So it's, I had not seen it softening yet, but I think it's probably coming this year.
Yeah. Not to overgive a plug for Team Ohana here, but maybe as a cue to all of us who are waiting for data, I think anything that we knew about time to hire and offer accept rates and offer decline rates, I think you can just throw all that out the window. Which probably, Scott, is probably making your life crazy right now in finance, and even time to hire, because there's such a flood of applicants for every role, from entry-level interns all the way through executive positions. Just getting through the number of employee referrals, inbound applications, one-on-one referrals is skewing all of that data off. And so I think even having that data, you can't predict what's going to happen next, which is making all of this kind of a mess for people who have remained. Is one of the things I appreciate so much about this platform, is you don't have to do a look back. You can actually see what's happening real time. And for those of you who don't have the tools or the budget to onboard something at the moment, I think asking your recruiters to track real time to hire in comparison to start to get some predictability. What are its compensation expectations? How are they shifting by org? Probably relying on your recruiters or people who are doing frontline screens to start to get that information. It's going to be manual and messy if you can't onboard a tool, but I think the real-time data is the only thing that you have, because otherwise I think all bets are off.
Yeah, I
absolutely.
totally agree.
Plus one to that. Plus one to that. Yeah, and oftentimes, and Amanda can relate to this as well, is like managers, they're building out the resourcing plan and they're like, I need 20 new people by 2 months from now. It's like, wait a second, that's not realistic. So.
No, I needed 20 new people like 2 weeks ago.
Yeah,
it's really
sure.
what that conversation goes. And yeah, I think I was going to make that point exactly. Is I think that often some of the challenges with headcount planning is this: once the headcounts approved, the floodgates open. And so then every hiring manager wants all of their roles filled. They're the I understand this, right? Like if you're in marketing, engineering, sales, whatever your roles are, those are the highest priority. And so I think understanding time to hire, how that's shifted over the last couple of months, how that's going to continue to shift. And also understanding what are the business priorities. And I think that is one of the biggest challenges that I've seen in headcount planning is you have, your CFO, your CTO, your CMO, they're all going to have, they're all part of the executive team and they're all going to have their own priorities, but you really they need to be aligned on what are the overarching business priorities. Is it we're doubling down on product design engineering this year? And so as we're thinking about our slim recruiting resources, because we've just gone through a layoff and have less recruiters, we need to figure out how we're prioritizing, how we're telling our recruiters to use their time, because in this market, especially, even if you're doing slow growth, you really risk burning really lean recruiting teams out. And that decreases productivity, it decreases morale, it decreases candidate experience. Like the downstream implications of that can be really intense and really negative. And so you really have to set the stage and kind of rein in your hiring managers around, yes, you have this head count, but you're not going to have a butt in seat in 2 weeks. So like, you need to plan your business accordingly, knowing that it's going to take a month, 2 months to get this person in role, even in a market where there are a lot of great candidates out there.
Yeah, great. Well, we've hit the 9:45, 3/4 of the way through, and I wanted to make sure we left some room for attendees to ask some questions. I know as a head of talent, I didn't always have a CFO in the room to ask very pointed questions. This is a circle of trust. So if anyone has questions from the finance side for a head of talent, or on the head of talent side for a finance individual on anything we've touched on, now is your turn. Oh, and if you haven't noticed, down in the bottom right-hand corner is the chat for you. So you can drop it into the chat section. Okay, well, it seems like people have really got this down, which is great. Don't be afraid to ask. I actually have a question, and this has always fascinated me, and it's for Amanda. Amanda was at Airbnb for a time doing some of the talent operations functions. And from the individuals I've worked with, I think Airbnb did talent operations better than any company I've ever known. In fact, I would get over there as much as I could when I was working for Pinterest to have lunch to sort of pull the secret sauce out because I thought they were doing it so effectively. Was there anything that you saw there, Amanda, at Airbnb from your earlier days that you thought sort of set the tone for this operational excellence that they had in recruiting that you would recommend or haven't seen elsewhere?
Yeah, and I was there during a really interesting time. Unfortunately, COVID really decimated the recruiting team there, which is when I was there. And they were on the track to going public, which was super exciting to get to be a part of in the late stages. And so they were getting very rigorous around things like every headcount planning and all the roles. Part of it was just in their ATS setup. So they used Greenhouse. I think they still use Greenhouse for their ATS. And it was very just their templates and how consistently they were set up in Greenhouse, which allowed for us to collect really good funnel metrics and actually get accurate data around, time to hire. And I was in the Portland office, which was doing a mix of mass, volume hiring for like our customer support agents at scale to, one-off director level roles focusing on the North America region. And so having a really strong and consistent setup, and then as a manager, making sure that your recruiters are using that really consistently is going to help enable your finance team with headcount planning, because you're able to say, roughly, if we're going to open 10 CXAs, this is how long it's going to take us to hire that. And, from there, it really gives the business the data to be able to budget and forecast headcount accordingly. So I think that was something that they did well. And they were also, from a DEI lens, which I had owned at Postscript, they were really good about not making exceptions and setting good precedents for, we're running diverse slates for every role that we hire for. What does that mean? What does that look like? And then just, holding a hard line for, we're going to do these hard things and we're going to do them well. And we're going to be consistent. We're not going to make exceptions. And I think, again, that really allows for predictability as you're planning.
I appreciate that. Scott, do you have probably not a punch list at this stage because you're in a little bit of a different situation, but knowing what likely the majority of the folks on the call are experiencing right now, do you have best practices that you would share, or sort of your top questions as folks are not working toward a layoff, but those who are settling and trying to do some predictive capability and hiring for the rest of 2023?
Yeah, that's a great question. We touched upon that a little bit in terms of, we have to have responsible growth, right? And making sure that each one of those resource decisions, we have clear visibility into the outcomes. I think I'm getting off track from your question. So
I would be just a takeaway. So for someone who leads a finance function, knowing that there's no real data out there right now, there is on the platform, but not everyone has access to the platform. So in lieu of that, how would you sit down with a head of talent or a head of HR and say, look, if we're going to really think about prioritizing through the business, like how does that actually happen from your lens, or what would your counsel be?
Okay, great. Yeah. So I was going to mention earlier, the partnership with talent and HR and finance is critical. And as I mentioned, given the amount of capital and dollars that go into resourcing, making sure that you're on the same page is essential, right? And so ultimately, if I own the operating metrics and outcomes, we have to be working closely and hand in hand with the talent team. And so we meet regularly. A lot of open dialogue, a lot of open collaboration. The tool that Ohana provides helps us give that right workflow and controls. You'd expect a finance guy to like controls, and that's one of the big things that I appreciate about Ohana. And it's like, whether we're changing resources or approving additional resources, and having that visibility and control, and then ultimately, even up to the point of like approving offer letters, right? And having that automated is so critical. So bounced around a little bit there, but I think I touched on some of the key parts.
I don't know that there is a perfect answer.
Yeah.
Jill, go ahead.
I was going to say, I think one other thing is that's really important is to have consistency, and to the extent possible, and this is harder for earlier stage companies, in like your career frameworks and leveling and comp banding, and making sure that there's a lot of consistency there. Because if you change the level of a role midstream, that significantly impacts your ability to hire for that role, right? If you're halfway through the search and realize, wow, we really need a senior, not a mid-level, or actually we should probably hire someone more junior for this because, you know, it gives us more room for them to grow. Those things can really dramatically shift the way searches are going. And so, you know, when you're doing your headcount planning, when you're kicking off new roles, really spend the time, and this is really hard for hiring managers, at the top of the process to make sure you're dialed in on all of these things, because there's just a lot of downstream implications to that always, you know, come back and bite you if you're not ahead of them.
Not to mention completely throw off your spend. So your time to hire is impacted. The spend cycles on the interviewers are impacted. The candidate burn you've impacted. But now there's, you know, like Scott could come in that situation and have completely missed the forecast because I thought you were going to do X, right? I could have approved this role for something else. Okay, I think this is a question for probably more for you, Amanda. Regarding time to hire and the increase in applications, do you anticipate companies not posting jobs in order to better optimize recruiters' time and maintain candidate experience?
Unfortunately, I think the answer to that is probably yes in some cases. I think for smaller companies where there's not as much brand recognition, they will continue to post. It may just be that they don't push things to LinkedIn. I know during my job search recently, I would apply to a role and it would be like, see how you compare to the other 800 applicants. Yeah. And how can anyone stand out, right? So it's you know, been a lot of networking, and so I think for certain roles, we will see that, especially in roles that have been heavily impacted, like TA. I think others maybe not so much. I hope it does. I think, you know, it's important for people to post roles both for internal transparency so that people know what roles we're hiring for. It helps you attract a wider range of candidates and get more visibility. But I think building in recruiters spending time going through 1,000 resumes. I was just talking to one of my old teammates, and they just posted like a BDR role and got, you know, 1,000 applicants over the weekend. And so it is just that kind of market. And so I think recruiters are going to need to be very protective of their time, and people are going to need to make sure that they're you know, building out that time to do resume review, and for candidates on the market, you're going to have to network and, you know, leverage, you know, don't be afraid to ask for help and leverage every tool in your toolkit.
Yeah, agree. I think the impact to existing recruiters is significant. And again, time to hire, managing expectations with hiring managers about the deluge of applications and referrals is pretty critical. There's one other thing that I just wanted to offer that came up recently in a conversation that I've never seen. I've been through 4 company layoffs, which really isn't that many, but they were significant enough to be quite scarring. When we were targeting the departments and the orgs that we were going to have to reduce talent from, we never did a skill cross-check on roles we were hiring for. Never. And I don't know if it was time or if it was a disconnect between the organizations. But I think this is a really important conversation for recruiters to even come in on, because they know their candidates, they've hired them, they work within the orgs. And the orgs themselves don't have the same level of really intimate understanding of the workflow between them like recruiters do. I would encourage you, if you're in this situation with your hiring teams, when they're designating who they're going to have to depart from, to build a skills checklist on what these people do. And let's look at our open roles and start to invite people to apply quietly or find a process that works for you. But I haven't seen that happen yet, and I'm not sure why. But I'd love to see products even evolve to address those questions.
+1 for sure.
Yeah, really good point. I haven't seen that either.
Yeah, maybe that's our new product at Team Ohana.
Yeah, when Amanda was talking, I was thinking about AI to help go through all those resumes. So
that's a good one too. Force ranking. There are products that do it, but I haven't seen them done really well yet. Okay. Well, thank you for everyone who made time this morning on a Thursday. I know we're just pushing into the busy part, just getting through the busy part of your week. So we appreciate the time. If you have feedback, please send us an email, or you can contact one of us on LinkedIn directly. You can send your emails to at the contact us on the Team Ohana website. And we appreciate the questions and the involvement, and especially Amanda and Scott for joining today. Thank you.
Thanks, everybody.
Thank you.
Goodbye.